my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is our daily technical analysis of stock index futures. I'll start with the UK FTSE futures. A bullish Mariposa yesterday and also a second bullish White Soldier and follow-on higher to the previous session's combined bullish Harami and bullish Hanging Man pattern. However, the most important feature yesterday was the clean break upwards over the declining short moving average, currently at 69.58, over the June to date downtrend, currently 69.87, and only halting and closing upon approach to the flatlining short medium moving average, currently at 70.24. The base of the action, interestingly, was on the slowly rising medium moving average, currently 69.43. Now needs at the very least a second consecutive confirmatory close over the downtrend to render it null. Now, unfortunately, so far today, a counter-reactionary bearish black crow yesterday, opening up just under the breached June to date downtrend and dropping down through both the short and medium moving averages before a pullback up. Prices only halted their decline upon approach to the previously highlighted support at 69.12. Seems we may have to wait a while now for another consecutive close over the breached downtrend. German DAX futures. A bullish engulfing pattern yesterday. Hardly surprising, I suppose, as the previous session was a small indecisive doji cross. This is the latest attempt by the market to untangle itself from the combination of the flatlining short moving average, currently at 15.546, and the flatlining short medium moving average, currently 15.556. They have captured the market somewhat since late last week. Prices rose enough to challenge the old 50% projected Fibonacci level at 15.629, which capped the market earlier this week and late last week. The 50% projected Fibonacci line managed to do so again yesterday. Meanwhile, below we have the medium moving average rising into the frame. That's currently at 15.328. I've noted for a few days now the precious nature of this market. Late last week it seemed to have calmed down as the longer term implications and reappraisal from May's monthly key reversal up seeped throughout this month's action. Well, not been so sure this week. We seem to be starting to have indecisive thoughts and actions here again. You may accuse me of being overly cautious, but I think that may be the best way with this market at this time. So far today, a reactionary move lower, if limited. The market opened just over the short stroke medium moving average and the short moving average before tripping lower. However, the low so far has not exceeded this week's low, made originally on Tuesday, before seeing prices move back up, some distance towards the moving average congestion area previously mentioned. But this is further precious behaviour by this market. US E-mini S&P futures. Second bullish White Soldier yesterday with a new all-time high and high close as well. It's also a suitable follow-on higher to the recent 2-day bullish meeting lines pattern and earlier combined bearish engulfing pattern and bullish hanging man pattern. Below the market, we have the 50% projected Fibonacci line at 43.43, whilst overhead we have the 100% projected Fibonacci line at 44.48 of the same move. Well, these Fibonacci levels are still there. And so far today, a much lower open and move lower, thus making today a possible bearish below the stomach pattern and even a bearish separating lines pattern if viewed correctly as well. The move lower punched down through the rising short moving average. That's currently at 43.78, but halted so far at the lesser projected Fibonacci level at 43.68 before retracing a bit and holding around the short moving average. This short moving average, along with the same lesser projected Fibonacci line, helped hold up the market back on Tuesday, so please don't dismiss it out of hand. Finally, we might be starting to form a new rising wedge pattern over mid-June or early July. It is early on this as yet. French CAC 40 futures. A second bullish White Soldier yesterday, trying higher up towards the 100% projected Fibonacci line at 66.80 and the all-time high at 66.87, but failing to make it. As I said on Wednesdays, Tuesday's bearish double wasn't enough to halt the market progressing higher. You see, we're still over the June to date downtrend, currently at 64.84. This broken downtrend is also the upper trend line of the June to date breached but still functioning descending expanding wedge pattern. And the last 2 days bullish action was the latest manifestation of that pattern. The target X on the upside for the descending expanding wedge pattern is in the 68.65 area. Initially slow, the move higher was looking more solid each day, as it seemingly had the support of last week's weekly key reversal up. However, the 100% projected Fibonacci line overhead and the all-time high just above that are formidable resistances. Now looking below, we still have the 50% projected Fibonacci line at 64.80 and the short medium moving average currently 65.13, as well as the more recent short moving average currently 65.09 as support. So far today, gapping lower open since filled in as the market tries to regain the gains made yesterday, but at the same time being very wary of the resistances now lined up overhead. It may soon beg the question, will we see a large double top? I thought I'd better mention it before I forgot. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.